Well, each Tuesday during tax season, we will be joined by an expert from Stadler and Company Tax Services to answer your questions about filing. One thing some folks are wondering about right now is winter storm damage, and if there are any deductions this impending storm, well, if there are any deductions if this impending storm hits them hard.
If you get damage from it, is that taxable?
It depends. So typically it is not going to be taxable, but if you get insurance money from your insurance company and you spend it on something other than what was damaged, it would become taxable.
Okay. I am starting to prepare right now for my taxes. What are some items that you would encourage people to have ready to go before they walk in the door?
Definitely all of their income documents, their W-2s, 1099s, if they have a mortgage, their mortgage interest statement, their property tax information, anything that could possibly be on the tax return, it would be important for them to have that. They're also going to need that letter about the child tax payments they received, if they got those, as well as their stimulus payment from last March.
Okay. What about medical expenses? Are those taxable?
Medical expenses are not taxable, but they usually are a write-off if you're able to itemize. So that all depends on how much you're able to itemize. They are subject to 7.5% of your total income. So in other words, you take your income, multiply by 7.5%, and then that amount is not going to help you. So it starts after that.
For children, my daughter is going to be going to the age of 18. What are the ages for children now, and how does that affect it?
As far as the child tax credit?
Yes. Yep.
So if they are, for this year only, if they are 17 or younger, they are qualifying for the child tax credit. Once they're 18, they don't qualify for that. And starting back next year, unless they change the law, it will be back to if they're 17 at the end of the year as well. Okay.
We kind of joked about it last time, but pets, are they deductible?
Not normally. So if you have a dog for medical purposes, for a disability that you have, you can deduct all of the cost of taking care of your dog, the vet bills, the food, things like that. If you use the dog in a business, for instance, if you have something where you need security and the dog is specifically security, that you see those old movies, the junkyard dog, then it would be tax deductible. But typically your pet, there's no deduction.
Okay. What if you inherit property last year? How does that get taxed?
Again, it's going to depend. So when you're looking at inheritance, it's going to depend on what kind of property it is. If it's investments, stocks, things like that, it's probably going to be taxable, the capital gains on that. There's also a step up in basis. So a lot of times you have to say, what was paid for this, or what was it worth, and did I sell it, and did I have a gain on that? So the magic words for the tax world is it depends, but oftentimes if it's inherited, there's not going to be much tax related to it.
Well, it's not going to be depends if they go to you and get the correct answer.
That's right.
So hope the new location's going great. Let's talk about where that's located at so our folks can know a home.
That's right. It's at 3464 South 4th Street. We're right between the South Stadium and Burlington Coat Factory. So great location there. We had a great open house last week. A lot of folks dropped in and got to see the new facility.
Yeah, if you have any tax questions, Lori will be here each and every week to answer them. Just send them to us at gdl@wtwo.com. Well, coming up.